Hello friends, today we'll see how to calculate insurance claim under loss of stock method. For this purpose, we have taken a practical problem, and with the help of practical problem, we'll try to understand how the claim is calculated. So let us begin and see the problem. Now the fire occurred in the business premises of Messrs. Unlucky Manufacturing Private Limited as on 13th of October 2019. From the record saved, the following information was made available. Firm normally closes its books of account on 31st of March every year. The stock on the 1st of April. Purchases made during 2018-19. Sales in 2018-19. Stock on 31st of March 2019. Purchases and sales are provided. There is also insurance policy amount provided, that is 10,000, and the stock salvage or saved is rupees 3,000. There is application of average clause in the policy, and you are supposed to calculate insurance claim under loss of stock method. To calculate, we'll be requiring some important dates and information. The first important information is fire had taken place on 13th of October 2019. Firm normally closes its books of account on 31st of March every year. Then the stock's purchase sales amount will be skipping for the time being. The insurance policy amount is rupees 10,000 and the salvage stock is worth rupees 3,000. So we'll be calculating insurance claim under loss of stock. So we'll be preparing trading account and memorandum trading account. Please remember that trading account will include the amount which will fall from 1st of April 2018 to 31st of March 2019, and anything that is from 1st of April 2019 to 30th of October 2019, that is up to date of fire, will be written in memorandum trading account. So in trading account, we'll be writing opening stock, purchases, manufacturing expenses if any, and gross profit which will be not provided. On credit hand side, we'll be writing sales and closing stock. So we'll be preparing this format so that we won't miss any of the item. Let us see the problem. Now in this problem, we have been provided with stock on 1st of April. So the stock on 1st of April 2018, 12,000. Write that opening stock in trading account. Purchases in the year 2018-19 is 75,000. So that will come under purchases of trading account. Then there is sales of 2018-19. So we'll be writing on credit hand side 90,000 and stock on 31st of March 2019, that is 15,000. Now please remember that the closing stock at the end of the year automatically becomes the opening stock. So the stock on 31st of March 2019 will be the same stock on 1st of April 2019. So we'll be writing the same stock in memorandum trading account as an opening stock. Now purchases from 1st of April 19 to 30th of October 19, that is 32,000, that is of memorandum trading account. So we'll be writing that in memorandum trading account. The sales will be writing on memorandum trading account, which is from 1st of April to 13th of October 2019, that is 40,000. There's some information missing. Let us try to find out what information is not given or provided. Now considering trading account, we can find that on trading account, the credit side is heavier. On credit hand side, the total is 1,05,000 and the debit side is lesser. The shortfall is 18,000. So that 18,000 is nothing but it is a missing information, which is gross profit. Let us go ahead. Now we have to calculate that what is the gross profit ratio. So to calculate gross profit ratio, the formula is gross profit upon net sales into 100. So the gross profit is 18,000 and it's based on sales worth rupees 90,000. So 18,000 upon 90,000 into 100, it becomes 20. Now let us close trading account. So that is 1,05,000 and let us move forward. Now as last year, we have been able to earn a profit, the same profit, that is 20%, or the average profit we might have earned if the fire would not have taken place. So considering the last year's blaze, that is 20%, in this year also, in memorandum trading account, the profit would have been 20%. So to calculate profit, we'll be using the formula. So in memorandum trading account, the value of sales is 40,000 and 20% of 40,000, it becomes 8,000. So let us write that 8,000. Now we can see that we have some missing information on credit hand side, and let us try to find out what is the missing information. Now Here the debit side is heavier because it's 55,000 and there is a shortfall of 15,000 on credit hand side. That 15,000 is nothing but it is the missing information. It is a closing stock which was on the date of fire, that is 15,000. Now to calculate claim, will be requiring some important information. So when the fire took place on 13th of October 2019, the stock which was available with the firm was 15,000. But out of this stock, the stock worth rupees 3,000 was saved and the insurance policy is 10,000. Now we can say that the closing stock on the date of fire was 15,000 and there is application of average clause. Now average clause can be applied only if the entire goods is not insured or the total closing stock is higher than the policy amount. Now let us calculate the gross claim. The total closing stock on the date of fire was 15,000. Let us deduct the salvage or the goods saved from the fire, which is 3,000. So actual goods that is destroyed by fire is 12,000. Now considering this, that the policy amount is lesser, that is only 10,000, and the closing stock on the date of fire was 15,000. So there is application of average clause as the entire goods or 100% goods is not insured. That we have discussed that the policy amount is 10,000 and the closing stock was 15,000. So though the loss is 12,000, actual goods destroyed is 12,000, we won't be getting the 12,000 claim. So when the firm is having goods worth rupees 15,000 and it get insured for only 10,000 rupees. So there is a case of underinsurance. So if there is such underinsurance, then firm will be getting average clause. Now how to calculate claim under average clause? Now the formula to calculate claim under average clause is policy amount upon total stock on date of fire into actual goods lost by fire, that is gross claim. Now we know that the actual goods destroyed by fire is 12,000. So the policy amount is 10,000 and the actual goods that was lying in godown was 15,000. So 10,000 upon 15,000 into 12,000, that becomes 8,000. So the final claim which will be lodged with the insurance company will be 8,000. We have to remember one thing, that the insurance policy is proportionate to the goods because the goods, the total stock is worth rupees 15,000, but the policy amount is merely 10,000. So the proportionate claim will be sanctioned if the policy amount is equal or more than the expected amount, that is more than the closing stock on the date of fire. Of average clause will not be applied and gross claim might be sanctioned as claim. For any queries or difficulties, I would like to have your suggestions or queries on my mail ID, which has been mentioned over here. Thank you. Visit my blog at commerceandsimple.blogspot.com and my YouTube channel Commerce and Simple. I am providing the links for both in the description.